Hello friends, myself C. Amit Bansal. Today we are going to discuss the topic of income from other sources under Income Tax Act. And detail of income from other sources is covered under section 56 of Income Tax Act. As per subsection 1 of this section, income which is chargeable under the Income Tax Act but not covered under any item from A to E of section 14 is covered under the head income from other sources. And what are the items A to E from section 14 is income under the head salary, income from house property, profit and gains from business and profession, and capital gain. So any income which is chargeable under Income Tax Act but not covered under any of these said items of section 14, then it would be covered under the head income from other sources. Now comes subsection 2 of section 56. It contains the list of the items which is covered under in the head income from other sources, and these are the major items which is normally covered under income from other sources. This is not an exhaustive list and it doesn't supersede the provisions of subsection 1. So items covered under subsection 2 of section 56 which is covered under the head income from other sources are dividend income, income referred in section 224(9), which is regarding lottery income, income from horse races, games, etc. Income referred in section 224(10), which is employees contribution from PF received by an employer, provided it is not covered under income from business and profession. And then 224(11), which is any sum received under Keyman insurance policy. And other item is any interest on securities, and any amount received on letting out of machinery, furniture, etc. is covered under income from other sources. If letting out of building is inseparable from letting out of machinery, furniture, etc., then also such kind of rent is covered under income from other sources and not from income from house property. And then comes the major section which is has been introduced few years before, which is clause 7b, which says that if any company in which public is not substantially interested, such that unlisted company issues its shares at a premium, and the consideration received for these shares exceed the fair market value of these shares, then the difference between the consideration amount and the fair market value amount would be considered as income from other sources of the issuing company, and fair market value would be considered as per the provisions of the Income Tax Act. And then comes chapter clause 8, which says that any interest on compensation or enhanced compensation. Clause 9, any forfeiture of advance or token money for transfer of capital assets. Earlier, if there was any forfeiture of advance or token money in respect of transfer of capital assets, that was reduced from the cost of acquisition at the time of transfer of that capital assets. So that was taxable only at the time of final sale, but now it has been amended and it has been taxable the moment it had the advance amount has been forfeited. And then comes clause 10, which is very important, which says that if any amount received without if an amount received without consideration and that amount exceeds the value of rupees 50,000, then the whole amount would be considered under the head income from other sources. If the immovable property has been purchased for a consideration and that consideration is less than the stamp duty value of that property, then the difference amount would be considered as income from other sources, provided the difference amount exceeds rupees 50,000 and variation within the range of 5% from the stamp duty value is acceptable, is within the acceptable limit. Suppose the stamp duty value is rupees 20 lakh and buyer has purchased a property of rupees 19 lakh. So the difference between the consideration and stamp duty value is 1 lakh, which is 5% of 20 lakh, which is within the acceptable limit. So there would not be any income from other sources in this transaction. But if the consideration amount is 18 lakh and stamp duty value is rupees 20 lakhs, so the difference amount of rupees 2 lakh would be taxable under the head income from other sources. But there are certain exceptions to this provision also, which is if the amount has been received from any relative, if it has been received by an individual on the occasion of its marriage, if it has been contemplated on the death of the pair, or it has been received from the local authority, or from any fund or foundation or university or educational institution or hospital or any other medical institution or trust referred in clause 23C of section 10, or from any trust registered under section 12A or 12AA. So these are the certain exceptions in which transfer without consideration or inadequate consideration would not be considered as an income from other sources. Then comes clause 11, which says that any sum received because of modification in the terms of employment would be considered under the head income from other sources. So I have given you the brief idea which item is considered as income from other sources, though that is not an exhaustive list as per the provisions of subsection 1, but these covers the most of the items which is considered under the head income from other sources. If you have any query, you can ask me or write a mail to me at akb79@redifmail.com. Thank you.